Hi traders, good morning, good afternoon, good evening. I hope all of you are doing good. In today's short video, we are going to learn about Bollinger Bands and how to use Bollinger Bands. We'll not go in depth like what is Bollinger Band and all the calculations and all, which you can easily find out when you Google it, and there will be a lot of details which you can study. But how to use it is what we are going to discuss in this video. Just to give you a brief about Bollinger Bands. This was discovered by a person called John Bollinger in 1980s, and he was into financial markets, and he got this breakthrough, and he was basically applying maths to markets and trying to understand how this works, because every asset, be it a financial asset or anything you take in life, it moves in a range. So this particular thing actually measures the volatility of the market. So this is a tool which actually measures, for example, let me just show you a simple example. Like for example, today, if you say this is your home, okay, this is your home, okay, and the range, how far you move in a day, either you go to office or go this way to meet your friends or anybody, that is a range which has formed, but end of the day you'll come back to your home, which is your range. So everything will move in this direction, and everything will have a range, and everything will come back to its original point. Sometimes you go a little far and then again you come back. So this is called as mean reversion. Okay, so whatever goes a little far from the mean, or you call it an average, it will come and return back to its original form sometime or the other time. So in simple language, this is the standard deviation for you to understand. Now this was developed by John Bollinger, and he used to trade this and only this model. And there are a lot of variations. People are using this indicator, which is easily available on any of the trading platforms. Now coming to the second point, which is what are the components of this Bollinger Band. So Bollinger Band will have a 20 period moving average. Okay, something like this, the center line which we said, it's a 20 period moving average, and there will be upper band and there will be a lower band. So this will be separated from mean by 2 standard deviation, and here it's a 2 standard deviation. Okay, so we will see this on charts for you to understand. So this will be the mean, and this will be the upper band, and this is the lower band. So remember this is called as lower band, this is called as upper band. These are useful. Now, so why these Bollinger Bands were involved, or why he has invented this basically will give him a condition called as oversold or overbought in the market. So whenever, as a simple example, whenever you buy any particular stock, it suddenly starts to go down, and you feel that whenever I am buying the stock, it is going down, and whenever I'm not buying, it is going up. It is basically to understand the cycles of the market always moves in cycles. Okay, so to understand like which is your oversold point, which is your overbought point, is what this Bollinger Band will tell you, and this will tell you like exactly which position you should buy, so that you can make profit and exit at the right time. Okay, so like every indicator, this will also have some pros and cons, and nothing is 100% in this market. So everything will give you certain kind of results if you follow the rules properly. So we'll discuss about that as well. So what is it considered like, how you define overbought and oversold? So if price is here, upper band is here, lower band is here. So if you see the price is going towards the upper band. Okay, then you consider it as oversold. This is oversold territory, and this is overbought territory. Okay, then the price is above the upper band, it's considered overbought. This is overbought upper band. That means there is too much of buying which has come. That means too many people have started buying. Now this has reached to a point where this is called as a overbought territory, from where the price can reverse. Now people started selling, and now it comes to a territory which is called as oversold territory, where people can start buying and taking it up. So this is a simple example like this. Now let's understand how to use this. How to use is the main category, okay, where we are going to look at the charts and try to understand how to use this in real time. Okay, so let me take you to a chart. So this is a normal trading view chart, which is free to open account, which any of you can open and check. Okay, so I have plotted the Bollinger Band here. It's a simple indicator. You can search, you'll get Bollinger Band here, and you can add that. So I have added this beautiful Bollinger Band. Both upper band is highlighted in blue, lower band is highlighted in blue. You can change the colors as well, and I also have an RSI. Now for those who are watching this video for the first time, these are called as candlesticks. Okay, this is used basically to measure price. So the candlestick usually have like four things. Okay, this will be your open of the price. Say it opened at 90. Say this is close of the price. Say it closed at 100, and this is high of the price. Say it's like 110. This is low of the price. Say this is 80. So this one candlestick of any time frame, whether you take 5 minutes, weekly, daily, monthly, it is telling you that price opened at the beginning of the day at 90. It went up to the low of 80. It went to the high of 110. It closed at 100. So this will give you a complete candle like this. So this is what is telling you, right, in simple terms. So now we are using candlesticks to identify the price movement. Then we are using Bollinger Bands to identify whether it is either it is overbought or it is oversold. Okay, so let's try and understand. So how to use this? If you are an investor, then the ideal time when you should be buying a particular stock is when it is in the oversold territory. Okay, how do we identify oversold territory? We are going to use a weekly chart. Okay, so let's use a weekly chart. So for example, today you're looking at this chart here. Okay, the price is above the Bollinger Band, and it's in a very narrow range, and it's a little far from the Bollinger Band. It has not touched the upper band. And whenever you see a candle like this, another candle breaking the low of this candle, is when you have to exit your position or take a short position. So this is already in the overbought territory. You can go short. Okay, so from there you can see the market has come down nicely. You could have exited here as well, you could have exited here as well. And once the trade is in your favor, always start trailing with 20 period moving average. The day any candle closes above the 20 period, you should exit. Okay, so keep that as a rule. I'll add some more things to this so that it becomes more clear. Okay, so that was a short trade. Now let's look at a long trade. Long trades are always better when the candle is opening below the lower Bollinger Band. So this is already in a very oversold state. That means a lot of selling has come. Now it's in the oversold state. So here is what you can enter and exit. So the disadvantage of Bollinger Band is that it will give you short trades. It will give you short trades. That means if you are looking at a weekly chart, it can give you 4 to 5 weeks trade. If you are looking at a monthly chart, it can give you up to 4 to 5 months trade. But it is not something which is going to tell you to hold it for a long period of time. Then you have to increase your time period, which is your monthly chart. Okay, so on a monthly chart, if you see the price on November 11th, Aarti Industries had come to 9.65, which was its completely oversold territory. And Bollinger Bands also move in multiple states, like one is a narrow state and then is expanded state. So it's like breathing in and breathing out, narrow state to expanded state to narrow state. So now if you see, is it a right time for you to buy Aarti Industries? Because the candle is closing below the lower Bollinger Band, but we need an entry candle which is a green candle which can take the high of this candle. Then you can go for an investment in Aarti Industries. Okay, simple like this. So what are we going to do? We'll just write down our rules or see some more examples so that it becomes clear to you. So let's check Ambuja Cement. Ambuja Cement has given you an entry here. Okay, this candle's high was taken out by this candle. So here is the point where you have to enter, which is 170, and you could have exited here, which is at 405. Okay, or if any candle closing below also, you can exit or you can add more here. But what happens in this scenario is that it made a new high, but now it is in a sideways consolidation phase. So like this, you can apply Bollinger Band and look where the stop is. Is it in an oversold territory or is it in an overbought territory? So let's look at Adani Enterprises, or Adani has been favorite topic for discussion. So let's look at its chart. So this is a weekly chart of Adani. So now tell me, is it not a great opportunity for you to look out for a buy entry in Adani if things go well? Okay, any green candle, which is higher than this. Actually, this has already given an entry here. Okay, and it is still retracing. So easily you can get a target of 3065. If it continues to go up, it can hit this upper Bollinger Band. That will be your exit point. So this you can have, but here you have to be careful with your stop loss. The stop loss has to be below this candle. This is your stop loss, which is 1681 minus 1600 point stop loss is what you can put if you are investing on this per weekly basis. And 600 point stop loss is, suppose whatever is your quantity risk capacity you are taking, so 10,000 by 600, so you can take up to 6 quantity of Adani Enterprise. Let's show this. For example, this is your risk 10,000 which you can take per trade. Now you have a 600 stop loss. So 16 quantity is what you can buy. My mistake, 16 quantity is what you can buy of Adani. So even if it goes below 600 points, you will lose only 10,000. But if it starts going up, it can give you great results from here. Okay, so that's about Adani. Let's look at Bank Nifty. Okay, Bank Nifty index, how many times it has given you an entry. Let's go back a little bit. Let's go back till the Corona fall. Okay, this fall, and you can see it has given you a nice entry here, and this stop loss was intact for you. This was stop loss, and you were able to ride this entire move upwards. Riding this entire move will be a dream thing, but most of the people get out when they see profits till here only. Even here or here, they might feel, oh, red candle is coming, it can come down. So you have to wait it out. So for that waiting, you need to use other indicators as well. But Bollinger Band is very useful if you're trading a sideways market. So sideways market always sell here, buy here, sell here, buy here, sell here, buy here. So this is very useful in terms of sideways market. It will give you a range to play. But if the market is trending, then you will be a little confused what needs to be done. So this is a complete trending move. From here it is going up, up, up. Nicely it's going up. It has just taken a 20 period bounce here, and then it gave an exit here. Exit has to be here. So how do we use this on a smaller time frame? We can use it on a 15-minute time frame. See how it works on intraday basis. Intraday basis, whenever these kind of candles close outside of Bollinger, you can easily get your target here, and any candle closing outside of opening outside of Bollinger, you can get target here. So this was a volatile day, but it played on both sides, V-shaped recovery. Here also you can see it gave a good target, again bounce, again target. Let's go a little forward. See here, opened above in the overbought territory. From there, nicely it gave a target here. You can even exit here. Okay, similarly narrow state and then expanded state. Outside here, but stop loss hit. It didn't go anywhere. This was outside and it came down, gave you big target. This was outside, gave you big target. This was outside, gave you big target. Here no entry. This was all sideways. It gave a small entry here, short. See, stop losses will get hit. Stop losses will be hit, but stop loss will be one candle for you. Always remember, if you are placing your entry here, your stop loss is just below this, and do not go short if the entry is not right. Short has to be always here, not here. It has to be always above the Bollinger Band in overbought territories. So to improve the accuracy, what you can do is you can actually have a 200 period moving average for any stock and see the overall trend. If price is below 200, then you look out for short entries. Okay, so even now, whenever you find candle above upper Bollinger Band, short, upper Bollinger Band, short. Here also upper Bollinger Band, you can short. So you have to look out for short entries. Similarly, for any kind of stock, say this is a stock, this is in a range, but this is crossing 20 moving Bollinger Band median, which is your 20 period moving average, is crossing above 200. So here you can look for long entries. Bharti Airtel, you can see it is in a short negative trend, short entry. But yes, if you want to go for couple of or intraday, you could have made money here. If you have trailed this, or you can enter here and exit here. So like this, you can use Bollinger Band to oversold and overbought territory. So you can combine it with RSI and have multiple rules saying that if this is the candle, the RSI is below 20, then you go long. The stop loss will be just below this stop. So what you need to do is you need to write down your rules, entry rules. Candle close below lower Bollinger Band, RSI below 15, okay, price below, price above 200 moving average. This is for long term investing, but short trades you can take without using this. And then entry will be entry candle should be green, taking out red candle. Okay, so these are your rules which you have to follow for entry on Bollinger Bands. So this can be the rules for short entry also. Short entry, same rule. Candle has to be above the Bollinger Band, upper band, and stop loss is always the candle, entry candle which you are taking. Below the low of the candle or below the high of that candle, you have to put a stop loss. So if it is a short entry, you have to put it above the high of the candle. If it is a long entry, put it below the candle. Now the ways to trade is that either you can take the equity if you are taking a long trade, or take a future if you are taking a long trade, or buy an option which can go long. But option buying I won't suggest, because there is a time decay in this. If it moves very slow, you will be in loss. In option buying, what you can do is, for example, 740 call you can buy, and 10 points away 750 call you can sell to, can sell two quantity, one quantity, and then 755 you can buy one. So like this you can make a butterfly kind of a strategy. The strategy will look something like this. So your loss will be limited in this kind of strategies, or it can look a little higher or lower as well, like this. Okay, so these are the rules which you need to follow. Let's look out for some more stocks and understand if those conditions are met. See this Biocon. Biocon is way away from its moving average, and there's a huge fall. So any sudden fall, if people have wanting to do a short trade, they have taken it at 200, immediately it has come back to 208, and a lot of people would have exited. So this is not, this is something is happening on this. Let's look at Bitcoin. Let's look at daily chart. Daily chart, you see Bitcoin is moving absolutely fantastic. So it is hit 27,423 right now. Okay, if you see this on a weekly chart, you will understand. Weekly, the candle is closing above 200, which is a very positive sign for Bitcoin. It can hold, it can run from here. Let's look at weekly charts only. Let's look at Sipla. Sipla is actually can give you an entry only when there is a candle closing above this 899. Okay, so I've been watching Sipla also because it is above 200, and I've already created an alert here, because look at the RSI is 9. Let's look at Concord. Concord is also giving an entry. It is nicely near 200 period moving average. So any big candle clearing this height 613 will be an entry candle. This is short trade. There is no entry here. Crude oil is again giving an entry at 200 only if it bounces from there. Let's look at Dabur. Dabur is in a consolidation. You see up, down, up, down. Delta Corp also near 200. DV slab is below 200, but if you get a candle clearing the high of this, you can take an entry here, but there has to be a big move. So this high should be clear, 2988. DMart is nearing its 200 period moving average. Escorts is decent, it's continuing its run. Euro USD is taking a bounce at 20. So like this, you can analyze any stock with these two things: Bollinger Band, 200 period moving average, and RSI, and identify your oversold and overbought conditions and take trades basis that. I hope you have learned something new in this video today, and I'm glad that I was able to take some time to explain you this particular concept. And always keep your charts very simple and not complicated too much. Maybe you can have this one indicator which will tell you which is overbought, oversold. The rules are very important here. If you risk only this much, you are about to gain all these things which will give you a lot of money and confidence. So only thing is you have to patiently wait when this candle will come out of Bollinger Band, and not take an entry on this candle and wait for the high break. Even after high break, there will be moments where the candle will come down, then go up, but you have a confidence that this is a right trade, where my maximum conviction was that it is going to go up from here. RSI was giving me an entry, Bollinger Band was giving an entry, price was giving an entry. So even if I go wrong, even if my stop loss is hit, I will lose. But again, I will lose only this bar. And when I gain, I will gain all this. So your risk to reward is always taken care. Risk to reward is important. So lose 1 bar, gain 5 bars or 10 bars or 20 bars. You will never be in loss. This is what is the key to success. I hope you like this video, and please do share, subscribe, and comment if you need any more information on this particular strategy. If you need any help, you can always reach out to me on my Telegram. Thank you so much for watching, and have a great day.